We'll be joined by Rakesh Sharma, ED of Bajaj Auto, who joins us to take us through what the quarter's been like and how business looks going ahead. Hi, Rakesh. Congratulations. Another significantly great quarter for Bajaj Auto. I think you are spoiling investors by outperforming every single quarter. But let's start with it. What's worked for you? This quarter, I believe domestic demand was the key driver. Exports are also seeing a little bit of recovery on better product mix. So give us the key highlights.
Good morning. And yeah, thanks. It's been a very good run. FY24 has been a year of multiple records, highest ever revenue, EBITDA, free cash flow, PAT, highest spares revenue, Pulsar volumes, highest three-wheeler volumes, and highest ever KTM volumes in India. So it's a record. But if I have to sort of single out a couple of things which have driven this record performance, the first is really the progress we have made in the upper half of the motorcycle industry, which is the 125cc plus segment. Here, our flagship brand is Pulsar. We've had a slew of launches over the last 6-7 months. And I must say that all of them have been accepted very well in the market. So we have now almost 18 models which are spanning the entire top half of the industry. And therefore, there is a Pulsar for every kind of customer, a commuter-oriented customer, a style-inspired customer, a performance-driven customer. So under the one brand, Pulsar. To give you an idea, we sold our last highest sales of Pulsar was 0.9 million. And this year we've done 1.4 million. And obviously the margin profile of the Pulsar brand motorcycles is higher. So it has had a very good impact on both the top line and bottom line. Our market share in this the sports segment, as we call it, is standing at a very solid 41%, a gain of 6%. The second thing which I would single out is really the performance of the three-wheeler business, which has done very well. The industry has come back. The recovery, except for one or two states like Delhi, is almost complete to pre-COVID levels. It has been driven a lot by the advancement of the CNG infrastructure which the government is putting in place. That covers now 60% of the districts of India. And we have seen that wherever the CNG is available, the three-wheeler, a diesel three-wheeler owner just shifts. Attracted by savings to the CNG driven vehicle. We have we have been leading this tech, and we have a 80% plus market share in this. This business has been growing, and on the back of the CNG advancement, etc. So these two would be really the key drivers. There are others, of course, but I would say that these two are the primary drivers behind the stellar FY24 performance.
Mr. Sharma, let's look ahead now. I believe export recovery still is gradual and maybe uncertain. In the next couple of quarters out, do you still feel like the industry-wide domestic demand, which is in expansion mode, could continue to, cushion the sort of slowdown in exports, the uncertainty across the export market, or there are some downside risks, the kind of expansion that the company is currently witnessing?
Well, you're right. The recovery in exports is going to be gradual and uncertain. That is the nature of the beast, given all the geopolitical scene and the macroeconomic challenges which many emerging markets are facing. So, however, in our planning, what we've done is we have sort of divided the overseas markets into three buckets. One is the stressed countries. Unfortunately, some large markets like Nigeria and Bangladesh are in there. And we've taken a rather conservative view of the development here, mainly because it is very, very difficult to anticipate and predict. The second is most of the other markets, which are very nicely now firmly in a recovery path, mainly in Latin America, ASEAN, Philippines is a large market. And there we are wanting to go faster than the industry recovery. And then, of course, we have new markets and new segments where we are sort of we have recently entered or about to enter. Our plant in Brazil is going to come on stream in May, which will open up some pent-up demand and allow us to expand the network. We are expanding our footprint in Europe. We have entered Venezuela, which has opened up. We have got a very fortunate development in Egypt with the Egyptian government recognizing our quadricycle queue. And as we speak, shipments are going towards Egypt. So when I put these three buckets together, then on the basis of this view, we feel that, and of course there is the base effect of FY24 being low, we can expect some kind of growth in FY25 over FY24 in exports too.
Well, right, Rakesh, we also want to talk about Chetak. I know you have a lot of plans for FY25 going in, specifically because it's in the EV space as well. Can you tell us about what variants we can see being launched in the new financial year, as well as perhaps stores in terms of expansion there as well? What details can you give us here?
Well, Chetak, as you know, has really ramped up in FY24. We used to be number 6 or number 7 player, and we are now number 3. Just in the last quarter, we sold almost 40,000 units, which was what we had sold in the entire FY23. There has been a lot of supply chain and R&D work which has gone on so that, we are at a much better and comfortable position when it comes to the margin architecture. So on this basis, we are expanding the portfolio. We upgraded the product in Q4, and probably in about a month's time, we will add to the Chetak family with another model which will have a more mass appeal. We are taking now this portfolio very rapidly, trying to scale it up. We are in 200. We have 204 stores as we speak. These are exclusive, dedicated Chetak stores. And I think in about 6 months' time, within 6 months, Chetak will be available at 600 stores. So that will give it a really good depth as well as reach. And on this basis, we expect that Chetak should continue to grow quarter on quarter.
Right, we're going between domestic and exports, but I want to talk to you about Egypt because I think that's a big market with the Qute being launched and being acknowledged by the Egyptian government. Some risk there because that currency is extremely volatile and predicting anything could be tough. But in terms of market share, market segment, what is the size of the market there that you're focusing on? And when will you see that rolling into or impacting your top line in terms of timelines?
So you see, Egypt was a very large three-wheeler market for us. And I would say that along with our partners there, we can take some credit for actually development of the three-wheeler category over 20-25 years. And, we used to do about 6,000, 7,000 units per month. And I recall that in some peak months, we even shipped 9,000 three-wheelers to Egypt. But for whatever reasons, the three-wheeler category was banned. And our last shipment of three-wheelers to Egypt was, I think, in April 22. So it's been a good 2 years. However, there is a strong need for short mobility. Not just about places like Cairo and Giza, but you see, Egypt is a cluster, a lot of small towns, the Khalia, the Ridava, etc., where motorized mobility is possible only through vehicles like three-wheelers because of the narrow streets, etc. So there is a solution which was needed to address the growing mobility needs of Egypt. And we have been working with our partners in Egypt and the Egyptian government, improving the case for a quadricycle, because the government wanted a slightly better product, and Qt was there, our quadricycle, and they recognized it in March. And we are, as we speak, starting to make the shipments. But you're very right. You alluded to the fact that currency is still an issue. So while the door has opened for us, and which is a very significant development, but how much we will be able to flow in depends, of course. The rate limiting factor or the pace determining thing is the availability of the currency. There has been some improvement because of all the aid packages in the last few weeks. And hopefully things will stabilize in the region, and we will get an opportunity to really transform the last mobility landscape of Egypt, along with their government, in a very nice way through the quadricycle Qt.
Mr. Sharma, very lastly, are you confident to maintain margins at current levels? I know some of your commodity prices have been going up, aluminium and copper, case in point. Nothing to worry about just yet, but any downside risks to margins, or you think you'd be able to maintain and sustain these levels over the next few quarters?
Well, it's looking like a benign environment right now in response to that little uptick in aluminum and copper. We'd already taken a small price increase on 1st of April, so that sort of trimmed the ship and brought it in step. However, there have been compensating declines in some of the other metals and the noble metals and things like ABS, etc. So this has offset the increases. And in addition to that, this gentle devaluation to 83.5 of the rupee to the dollar is very helpful, because over 40% of our revenues flow in as dollars. So that is sort of releasing pressure, or whatever little pressure on costs there is. So therefore, everything combined, we seem to be in an equilibrium state right now. But we have to be watchful as always.
Sharma, we leave it at that. Thank you so much for joining us and taking us through the quarter, as well as what we can expect going into FY25. It certainly seems like a very exciting year coming up ahead.